Hello there. Hi, Tracy. Thank you for letting me know. Yeah, I was just on pause for a moment. I was just filling out something on the currency strength meter. But I hope everybody's doing well. Welcome to today's live stream. It is the 25th of July, Thursday, 25th of July. We're going to take a look at how the strength meter is performed in this session this week. It's had an absolute belter of a trading week with what we've been looking at in terms of currency strength and weakness. We're also going to take a look at some charts of interest. We're going to take a look at how the yen is performing at the moment, because the yen, very strong currency right now. We're going to talk about whether that is something that we want to try and be a part of still, or whether we want to wait now to see if there's any kind of pullbacks on that market. And yeah, we're going to go from there, really. But if you have any markets you want me to take a look at in today's live stream, then let me know. If there's any kind of questions that you want to ask, please let me know in the chat box. But yeah, I hope everybody's had a good week so far, good trading week. I've had a fairly decent trading week this week. Left a lot of pips on the table, though. I would have liked to have got a little bit more out of the markets personally. I'll go through some of the opportunities that I've taken this week. I would have liked to have gotten a little bit more out of them. Haven't quite maximized my sort of results, essentially, which I'd like to have done a little bit better on. So we can discuss that as well. Yeah, pound yen, that's all I want to see. Maybe NAS 100. Pound yen, yeah, we're going to discuss pound yen as well. Pound yen has obviously been on a very good run to the downside over the past couple of weeks. This week really just kind of seen a very aggressive move lower. But yeah, there's a couple of reasons why I wanted to be pound short this week. We've got a currency strength meter play saying that we should be looking at short pound, and we've also got a current a trader report signal saying that you should be short pound at the moment. So there's definitely nice little plays going on here right now. I'll break this down from a weekly, daily, and 4-hour point of view in a moment. Just give everybody opportunity to jump in if they wish to. Good afternoon, Vincent. I'm doing really well, mate. I hope you're doing well too. But yeah, as always, what are we looking at? We're looking at currency strength and weakness. The reason why we look at currency strength and weakness is because it gives us opportunity to capture large trends, or at least try to get on the back of trending markets. And this week, my focus was really on shorting the New Zealand dollar, shorting CAD, as well as buying the Swiss franc and buying the Japanese yen, right? Didn't really take any trades on yen personally. That's because I still feel like the yen could weaken in the grand scheme of things from a macro point of view. So the downside that we're seeing right now, I feel, is maybe down to more risk sentiment more than anything in the markets. So that's something I'll be keeping an eye on. Obviously, euro had a bit of poor performance last week, and the pound. The pound, I was looking more of a reversal because of what's going on the 50 MA strength meter. It was the sort of strongest currency on the 50 MA strength meter in that reversal zone. So I was looking for a slight reversal to form on the 50 MA strategy, basically. But yeah, this one here, there's not as much information on this strength meter than there is on this strength meter. What I mean by that is data. If I go into my strength meter, you can see I've been tracking this from September 2020, whereas the 50 MA strength meter I've only been tracking from the 27th of May. So there's not a lot of data on the 50 MA one right now, whereas I've got over or just under 4 years of data to go up there. So yeah, nice little setups going on this week. Like I said, the real kind of markets that I was looking to get involved with: dollar yen short, dollar Swiss short, CAD Swiss short, CAD yen short, Kiwi Swiss, New Zealand yen. I also did like pound Swiss to the downside as well. And I'll show you why I liked that pound in a moment, and we'll break down pound yen. Hi, Ratish. Hope you're doing well. Let's bring on then some COT reports. Now, I know this isn't the sexy stuff of trading, you know, but for me, boring trading is good trading, right? Boring trading for me is successful trading, because you know what your plan is. You just need to continue to execute on it. I don't try and get caught up in too much of the wider nonsense. Try and mitigate my sort of day trading risk now. I don't day trade as often as I used to. Really come out of that now because of just other work commitments. But yeah, let's go have a little look at some of the commitment to trader reports, because this is something that I take into consideration every single week. And what I do is I look for extremes within the commitment to trader reports. So I'm looking at, why did I just minimize that then? Here we go. I'm looking at this, essentially. I'm looking at this situation here on pound sterling. Recce, yeah, boring trading is where the money's at. I absolutely agree with that. You know, I was saying this morning, like, I had a trade, held it overnight yesterday. It was a pound Swiss short position, and woke up and I'd hit TP, and I was just like, that is the trading that I love to see. I love to be able to go to sleep at night, not having to worry about the market, what it's going to do overnight. I don't hold trades over weekends. That's the only thing that I don't do, just because of headline risks and stuff. But I'm happy to hold it overnight. And I held my pound Swiss short that hit TP when I woke up in the morning, and I was just like, yeah, that's the trading I like. That's the trading I like. You make money while you sleep. But essentially, why am I looking to short pound at the moment? And it's all down to what's going on here on the commitment to trader reports. If you don't know what the commitment to trader reports is, it's basically a report that you can get for free from the Chicago Futures Trading Commission. It's provided by the CME Group. Essentially, what it's doing is showing you those orders and contracts that are filled within the markets, right? And it gives you a synopsis of commercials. Commercials are in it to hedge their positions, because it's more like businesses looking at international risk and looking at future planning. And then you've got the non-commercials, who are in the business of making money. They're large traders, hedge funds, things like that. So there's a side of it where you want to be following the non-coms, because they're the people, that the big boys with the money. And then there's a side of it where you can look at extremes on commercials. And that's something that I tend to look at when it comes to commitment to trade reports. Hi, Tabo. Hope you're doing well. So basically what this is saying to us here, okay, just to break down what the sort of information is here. You can see that there's 0% all across the top here. So if I just go to the top a second, you can see that it says commercials and it says 0%. Now this is a software called Markets Made Clear that I talk about quite a lot. Spoke to Ray recently. He's given me a little sort of in-depth one on here. But basically what it's telling us is that over the past 36 months, that short contracts are at the highest they've ever been, right? Over 18 months, they're the highest they've been, obviously, because we're at highest for 36 months. Highest they've been in the last 6 months, okay? Now, if we look at the commercials percentage change here, you can see that on the short side of things, we've gone up 42%, okay? So there's been significant positions added in from the commercials, who, remember, they're not in the business to make money. They're in the business to hedge. But what we're seeing is that they're doing it at extreme levels. And when we reach these extremes, we can often see significant reversals. Now, if we look at the non-coms, right? Non-coms, you can see that they're adding long positions. So from last week, they've added 35% long positions, and they've taken away, well, they've added 0 short positions in the market. That's because they're trend followers. The trend on the pound at the moment has been very bullish. So they're buying pounds. The thing is, though, being a trend trader, you're going to be wrong at least once, right? And that's where the extremes come in, okay? That's where the extremes come in. Sorry, a couple of questions, Vincent. So you don't hold trades over the weekend. If you're in a losing trade on Friday, what do you do? I'll close. I'll close, I'll reposition. If I feel like it's still a good position to be in, I'll reposition on Monday. Yeah, close. Because what you're going to gain from holding it over the weekend? I don't see what I'd gain from holding it over the weekend. Hey, Azalano, I'm doing good, thank you. Hope you are too. Good day to you as well, CG. Welcome to the live stream. If you could leave the stream a like, guys, I'd really appreciate that. I will lets me know that you like the information that I'm giving. Lets you know that you like this a little bit more of an in-depth. Remember, what I'm all about is why do you want to be in the market, right? Why do you want to get into a particular trade? Okay. And that's something I've always taken with me. The person who actually created this software was the person that taught me that, back in the day, was why do you want to be short this market? Is there a reason? And I really took that into my trading career. And this is something that I look at consistently. But essentially here, what we've got is the index, right? So all this is showing us basically is the 36-month index. That just basically shows you where the short signal and the buy signal is, essentially. But what's important are these, right? You've got your commercials here and you've got your non-com commercials. I'm going to take the net off, which is just basically the difference between the buyers and the sellers. And what we're going to look at is the individual contracts in terms of the long and short contracts. Now, this is what I mean by commercials. Short contracts are the highest they've been in the past 36 months, because you can see this red dot here, which is at 200K. If you look left across that line, you can't see the red line anywhere near that. Now, if I open it up a little bit, do we see a similar pattern anywhere else? Back here, right? All the way back here, which was 2014, right? Back in June 2014, right? We've got short contracts were up around 18K. So this is telling me that commercials are selling pounds at levels we haven't seen since 2014. Okay, so look what happened to price after that. All right, nice big decline in price. Now, if we look at the non-coms, what were they doing at that time? They were buying heavily. Okay, and the reason why they're buying heavily is because they're trend traders. They're trying to trade this trend, right? Whereas the commercials are in it for business. So essentially, you could argue the fact that when you see this, are they future planning? Do they know something economically or they're expecting something to happen economically that they want to try and get in front of, right? Now, the Commitment of Traders report is absolutely rubbish at timing things, right? It's crap at it. Do not use it as I'm going to go short tomorrow. What you need to do is then see, does everything else in your bias line up? Okay. Now you can see here, obviously, we've got this potential short signal. We're up at a level of resistance. This is a weekly chart up here, right? So if we just narrow that back in and zoom into that, this is the weekly chart. You can see we closed bearish last week. So this week, really, I was looking to see if that momentum would continue. Okay. Now, on the opposite of that, we had a Swiss franc that was very strong, right? 100% across the board. So I like the idea of buying Swiss francs, selling pounds this week. And it worked out really nicely. If I just go to pound Swiss quickly before I do my analysis on pound yen, look at pound Swiss. For the past 2 weeks, we've been negative. We've fallen about 330 pips to the downside. If you look at the market this week, you can see that we had a really nice head and shoulders pattern. And on Tuesday, this was the area we were looking to see broken to the downside for short trading opportunities. Now, there's two ways you could trade this potential move forming within the market, right? And I also included this in the week ahead analysis video, or actually it might have been the currency strength and weakness update. Now, I ended up trading around here on the breakout on an hourly chart. So if I just go to the hourly chart, it was off this candlestick here, right? This one. I ended up going short off of that. I put my stop loss above the highs. And for this one, I only managed to get around about a 1.3 R out of this. I was looking at basically this little area in here first, and then this kind of area down here as potential targets, because it was an area where we had some strong buying coming in. There was like that one of those really nice triangle patterns and a breakout. considerably higher. So I just targeted there. I didn't expect price to break through and continue lower. I expected further downside, but I was expecting a rebound from there and then a continuation, and I would have looked at maybe a re-entry on this, but we didn't get it. And this is what I was saying at the start of the stream. I've kind of left a lot of profit on the table this week because that was 1.3. Could have had at least 2.7 R out of this potential move. But that was just a breakout move that I looked at because we had this really nice 4-hour consolidation building up. Again, I love consolidation. Shows you that buyers and sellers are agreeing with price. And then sometimes when you can get a breakout of that, it can offer you some decent moves. This being one of those. So pound Swiss was really good, but let's go up to pound yen. So, you know, wanted to be short the pound this week against stronger currencies. I mean, look at this move on pound yen. It's been incredible, hasn't it? Market has really significantly dropped. My only thing now is, do you want to try and buy the yen? You know, that's the only question really, isn't it? Do we want to be buying the yen right now? And my answer to that is no. And the only reason I don't want to buy yen right now is because price has moved quite a significant way. I feel like the move could be potentially done, right? Could be potentially done. 𝖢𝖥𝖣yi, hi John, how you doing? Yeah, good, thank you. Hope you're well as well. You going sleepless weekend? Yeah, well, trades over the weekend. I would definitely go in a sleepless weekend. Joffrey, thoughts on silver and the CAC? Yeah, we'll go talk about those in a bit. But yeah, essentially got a little bit of support coming in here on pound yen on the daily chart. Looking at the 4-hour time frame, you know, we're starting to find support down in these levels around 196. Really speaking, I'd be looking at what dollar yen's doing here. What's the situation with dollar yen at the moment? You can see we've continued to trade lower here. You know, I thought we'd get a couple of rebounds around 157. Didn't get it. Price has moved to the downside. We've kind of seen a significant move off of here, though. So if I just kind of zoom out a little bit on the daily chart, very significant level of support around the 152 handle. And you can see it was resistance here in the past. A little bit of resistance before acting as support. And now we're back in it. And this would be a very logical area for sellers to take profits on dollar yen, right? Now, if we want to see this as the bottom and we want to see this as a reversal, I think a few things need to change. One of those is being the macro outlook out of the US at the moment. We have US core PCE price index coming up tomorrow. That's going to be a big market mover. And I think if we get upside misses on that, then I think dollar yen could continue to push higher. However, if we get downside misses and the dollar data continues to weaken, we have had some extra dollar data out today as well. We had unemployment claims as well as advanced GDP quarter on quarter. And GDP actually surprised quite significantly to the upside, 2.8%. Previous was actually revised down from 1.6 to 1.4s. And then we had unemployment claims coming in slightly lower. So if they wanted to see more pressure on the labour market, you'd want to see this number being higher. And advanced GDP being a little bit higher is quite interesting, but still kind of within that range of what I'd say is typical for GDP. You know, if we zoom in a little bit and just have a little look at what's going on recently, 2.8 is not the biggest number we've had this year. We had a number, well, actually it is the biggest number because it's quarterly, isn't it? So it is the number we've had this year, but it's not the biggest we've had for the past few years. You've got 4.8 in October of 2023, but GDP being above the zero line is good. 2 quarters below GDP, below zero on GDP is usually considered recessionary. So the market may have some positivity around that in the very, very short term. So yeah, we've got this data tomorrow, though. US core PCE price index. This is the data that the Federal Reserve will look at in terms to gauge inflation, expected to be 0.2% up from 0.1. If they want to cut rates, they don't want to see this number going up. They want to see it either matching expectations or previous, or at least coming in lower. And we don't have that right now. We don't have that right now. There could be a miss to the upside. Miss to the upside could put the brakes on the potential cut coming in September. That's when I think we'll see some upside to dollar yen. Alternatively, if price can just hold here, consolidate, then break higher, I think that would be something to really look at if you want to be selling yen again. But at the moment, I'm not going to touch the yen. Up here, I was talking about when is that intervention going to come. Again, I didn't touch the yen until we saw that intervention. We saw it. Didn't feel like that would have been enough, because if you think about the macros coming out of the Bank of Japan, they're not hiking interest rates right now, right? They're going to keep rates as they are, essentially, unless we see any kind of up misses in inflation out of Tokyo, which we haven't seen just yet. I don't know whether there was any data there. Yeah, we've got Tokyo core CPI year on year coming out tomorrow. So if we did see upside to this, then the chances of a Bank of Japan hiking interest rates will be a little bit higher. So you'd see yen strength continue. So that's something to look out as well going into overnight. So if you are trading yen right now and you are buying it right now, just to let you know, there is some risk events coming up for you. Let's go across then. So there was a couple of questions thrown in here. Joffrey actually said, what's your thoughts on silver? So the last time we spoke about silver, I actually thought it was a good idea to short silver. I don't know how prices do. Well, okay, yeah. So prices kind of folded here. This was where we were looking at getting short, right? This break and retest of this volume area. This was what we were looking at. This consolidation. Price broke out, and then we failed. And I said, well, typically when price does this, does that little failure, we do often see some downside. We also combine this with a little bit of commitment of trader signal as well, because if we look at silver, might have changed now. Yeah, it's changed a little bit, but at the time, these were 0% on silver when we looked at it. And it was basically showing us that silver had a short signal from the commitment of traders. They were heavily short. And what we talked about was the fact that the market may remain within this weekly range, right? That's one thing that we spoke about. So price moving to the downside, I was fairly confident that it would move, but would move a little bit lower. You can see even from the non-commercials, they're not really buying as aggressively now as they were. So we're starting to see sort of maybe a bit of profit taken from that overall move. So yeah, I expected a little bit of downside. If we look at the weekly chart, we have broken through those lows. Let's get rid of all this now. Now, I was looking for a retest to try and get short, but just didn't happen for me, so I can delete that alert. But essentially, our overall target for the longs was $32, right? We thought that maybe if we breached $32, we could get up towards the 35s, maybe even the 37s. I was expecting maybe gold to kind of help drag this up. But if we look at the monthly chart right now, it paints a bit of a different picture, right? And this is a good thing about looking at higher time frames as well. If you look at the monthly, we're still fairly bullish, right? The market has rallied, consolidated, rallied. So from a monthly perspective, there's still good opportunity, I think, to buy this market. It's just where, again, technical analysis helps us with our timing. And we can see there's a nice sort of zone in here between sort of $25, maybe even up to $26, down towards 22s again, right? So that could be a good area to start looking to be a buyer again. If the market comes back down into here, maybe consolidates, break higher, could be an idea to be a buyer again of silver. But right now, I wouldn't want to be buying this. Like I said, heavy sell signal from the commitment of traders was really something that put me off wanting to continue to look for longs on silver in the short term. We've now breached these lows in here, right, which was support on resistance, turn support. Price is now through that. So I think what you could look for is maybe some shorts still on any kind of pullbacks. So what I would be looking for here is very much similar things like what happened here, right? Price consolidated, broke to the downside, or if we get a pullback, I'll be watching if the low, if the highs start to fail and we start to get a lower high, then I'd be looking for the continuation to the downside here on silver, because we're not going to see, I don't think we'll see heavy buying just yet of silver. Very similar with gold, actually. I ended up taking a really nice long on gold yesterday. and managed to sort of get out right at the top there, which was very, very fortunate. My price of exit was literally 24.30. Let's have a look. Let me zoom in a little bit. $2,431.16. That was my exit. So $2,431, which was about here. So literally right at the top of that candle, I exited my position. And that was because there was a bit of volume over here that I didn't want to see, that I expected price to hold at. And then we've dropped. We've just sank. I didn't expect that little bit of a move, to be honest. When I woke up this morning and saw that, I was a little bit like, okay. But really speaking, if the price action's a little bit choppy on the lower time frame, just jump up a time frame. Look at this weekly chart. Paints you a really nice picture of what's going on. And we talk about weekly charts quite often. Really nice rejection last week. We broke into those all-time highs. Nice. That could fuel a break higher in the future. But right now, price is working within this range, right? So I'm happy to continue to trade within this range. We came to the highs. We've rejected. What do I expect now? I expect price to come down towards the lows here, and either rebound and continue or push back, like how we could expect what's going on in silver, right? I think a drop lower would be quite surprising. Although if you look at the monthly time frame, we are starting to create a lot of wicks to the upside here. So there's evident that there is some strong selling, or at least some strong profit taken on gold positions. Now, ultimately, where would I want to buy gold? Down towards this $2,070 sort of $5 area would be really nice to really do business with gold. So that's my overall where I'd want to see gold to. Very similar to silver. I want to see silver down back towards these levels again. But we'll have to see what happens. We'll have to see what happens. We can only really take it a time frame at a time. Depends if the dollar strength comes back in the market as well. If we do see some dollar strength coming back in, then yeah, we could see a little bit of a break lower again in gold. But I don't really see that. I don't really see that right now. Like I said, commitment of trader reports not really showing a top yet. And what I would be looking for. So you've got gold here. Oh, actually, I might be wrong. I haven't looked at gold commitment of traders report this week, and we do have a sell signal. That's interesting. Right, let's see what's changed. Commercials have increased their short positions by 34%. So that's quite significant. Longs are still there, but only by 15%. Commercials are more long than they are short. So yeah, we could actually see a little bit of a swing here on gold. I didn't actually see that. It must have happened last week. I haven't actually looked at gold on the commitment of trader reports. So it's saying that it's at an extreme level we haven't seen for a while. Now, looking back, the contracts are nearing levels. So again, it's still not quite where I'd want them to be. I wouldn't mind another week of selling on the gold comms positions, because this was back in 2022, where we had this nice little dip in gold prices. I think if we see selling at the same levels of what we did here, that could highlight a little bit of a move to the downside, right? What's interesting here, though, is, like I said, the non-comms, although they're heavily long gold, they're adding to short positions now. They're adding shorts. So this means one or two things. They're either trying to take some profits, which is giving them, which for them, they'd have to enter short positions to close those positions, or they're generally adding shorts. But I would like to see a dip in the long contracts. I would like to see the dip in the long contracts there. And, if we're looking at the sort of short contracts here on the commercials, I'd just like them to be a little bit higher, just a little bit higher. Give us that extreme, that real big extreme, and I would look to get involved with that. Just nothing, just covering gold right now, just talking about gold, talking about the commitment of trade reports on gold. Let's have a look at, let's go and see if there's any seasonal plays on gold right now. Let's go to metals, gold. See if there's anything seasonally going on right now. We've got a 63% correlation with what's happening between the current year's price and what's happening with the overall average, which has been 49 years worth of data. So yeah, I would like to see a little bit more higher correlation in these two boxes for me to really look at the seasonal play here. There is a seasonal potentially coming up in August that could be one to look out for if this July closes bullish. So we'll have to wait and see if that's in play. So I don't think the seasonal really is going to make too much difference here right now, whereas you've got this this situation here, which would be a little bit more enlightening for me. It's COT free? No. So Markets Made Clear is not. If you want free COT reports, there are a couple of places that you can get it from. Let me just have a sip of tea. I made a tea before I started the stream, and it's been 32 minutes. And I can feel my mouth getting drier. So if you want free ones, there's two places, right? So there's two places. The first place is this place. So I've only found this recently, so I haven't done too much research into who's created this, why they created it, you know, things like that. But I mean, there is things over here. Look, there's a little about me page, so we can see. Valentin Dima, a 38-year-old living in Romania, full-time trader for 6 years, passionate about COT reports, I guess. So yeah, starting. So you can come and have a little look at this in your own time. What I'll do is I'll drop this in the chat for you. Now, this is free. This is completely free. And you've got to remember, the commitment trader reports are free. Okay, and you can get them from the cftc.gov website. Okay, if you come over to the cftc.gov, all you need to do is come over to market data and economic analysis, go to the commitment of traders, right? Come to this page here. And what you want to do is scroll down to the Chicago Mercantile Exchange, right? So the CME, okay, CME. And all you want to do is click on short format. And it gives you the commitment of trader reports. You can see this was dated the 16th of July. So this is the most recent commitment of trader report that we've got right now. Okay. And it shows you the non-commercials, the commercials. So you can come and download all this data for free. Obviously, it's nice when somebody puts it in a nice package for you. Some people you're going to have to pay for. That's this. You know, if you want it looking like this, then you're going to have to pay for it. But then some people have done it for free, and this is one of those. So if you go to COT reports here, they've got a nice little weekly summary page that you can look at. So weekly non-commercial. So they're looking at the non-commercials. They're looking at the hedge funds and the traders, right? And what they're showing you is heavy short selling in the New Zealand dollar, which is great. We want to be short Kiwi, right? They're short in the New Zealand dollar, which is lovely. They're heavily long pound. Now, you're going to have to read this a little bit differently because, like I said, non-commercials are trend traders. They're looking at the trend of the market and they're looking to try and make money off of big trends. The pound is a very bullish pair, but they're looking at it or they're buying at aggressive positioning, right? It's a very, very aggressive. So that means that there might be a little bit of a top coming, and that's what we're seeing right now on the pound. Swiss franc, they're very heavily short Swiss franc, which is great. Sorry, not great. They're adding heavily short, but they're wrong at this time, and you want to be buying Swiss francs at the moment. What else? You've got to read it a little bit differently. So you can see, look, Australian dollar, they're heavily long Aussie dollar. They would have been battered these past couple of weeks, right? So, you know, that's why I kind of look at both the commercials and the non-commercials, because I like to look at extremes within the COT reports. The other place you can look for it as well, which we always used to use, is barchart.com. Now, this is free. It's not the most up-to-date data, right? Okay, but you can come to one of these, just click onto futures, click onto commitment of traders. Again, I will add this link in the description or in the comments so you can have those. Make sure you bookmark these pages, guys. Click on them, bookmark them. These are something that you can look at every single week. And look, you've got all the reports really that you need. So if you want to look at what have we been looking at recently? If you want to look at Swiss franc, for instance, you have to close a lot of this stuff off, right? And then what you've got here is the commitment of traders financial and the commitment of traders COT report chart, which is the legacy. That's what you want. You don't want this one at the bottom. You want the legacy charts. Yeah, and essentially it shows you the same things, but all it says is the red line is the commercials, green line is the non-coms, small speculators are in blue. Okay, so you basically want to do, or what you want to look for essentially is, again, extremes. You can see they're buying the Swiss franc at extreme levels. If you try and open this up a little bit, the last time we were in these kind of extremes was back in 2019. And look at the Swiss franc futures. Nice rally in the Swiss franc futures there. Okay, that's what you're looking for. Geoffrey, what time do you usually use your entries? They really vary. They really vary. Probably the past couple of days, or the past few weeks, I've been kind of trading like on the hourly time frame or 4 hour. One of my entries yesterday was the 4 hour. One of my entries was the hourly. It just depends where I see the opportunity come in. If I'm really like focused in and I'm looking at a specific area of price action and I'm looking for the change, then I'm happy to go all the way down to a 15-minute time frame to try and get a tighter entry. But I've been very busy recently, so I've been trying to just trade higher time frames essentially. Gold's having another little push. Right, okay. So yeah, that's all your community trader information. Hi, right guy, hope you're doing well, buddy. So yeah, answer your question, Vincent. There are areas that you can get it for free. Obviously, you can go and get it directly from the CFTC yourself. You can download that, create your own spreadsheet, and you can monitor it. I actually suggest giving that a go, you know, because it helps you understand, okay, they've increased contracts. What's happened to price, right? That's the way I would look at it. You could kind of track it over on a Google sheet or whatever, and then basically try and format it in a way where you can see the change on the week. And then when you see the change on the week, you can be like, okay, well, they've increased their long contracts this week. Let's see what happened to the price of that. You know, does it compare, and can you kind of create a strategy from that? Well, I think it's definitely something to look into, you know, looking at commitment of trade reports, looking at seasonal analysis as well. I think is also good to do. It kind of brings me back to, why do you want to be involved with the market? You know, a lot of my analysis comes from strength and weakness, but if I can back that up by trading with a sentiment from community traders or seasonal, and if I can back that up again by fundamentals, then you know you're onto a good run. You know, one thing I wanted to do today was have a little look at how the the currency strength meter performed this week, right? There's something I do every single week because I like to see how this performs, because then I know what I can potentially expect from the market, right? So there are a couple of opportunities this week that I really like the look of. There was 4 in particular: CAD Swiss and CAD Yen, and Kiwi Swiss Kiwi Yen. Like I said, I did like pound Swiss short as well from a commitment of trader point of view, so I took a short on that. And obviously there was dollar Swiss, dollar Yen that you could potentially look at for shorts this week, right? So if I just let's see if I can sort of side by side these at the moment. Let's see if I can do this. Let's see if this works. No, that's not what I want to do. I wanted trading view. Okay, trading view doesn't seem to want to do that. That's a shame. I was going to side by side it so we could have a little look at how the market's doing. Maybe I can just whatever come out of this actually. F11. Let's see if this works now. Ah, there we go. Beauty. Love it. Right. So what we're going to do, we're going to side by side it, and we're going to have a look at how the market's performed, right? Because we want to use information that's going to help us make money, right? That's the way we look at it, right? I like the way that you are using has a chart with it. I like the way the one you are using has a chart with it. What do you mean by that, Vincent? Oh, you mean the commitment of trade reports? It has the chart with it, right? I get you. Yeah. That's why I like it as well, because I can see in the past how it's performed. Okay, but you can do that yourself. Just takes a little bit more. Just takes a little bit more effort, right? So what I like to do is just go to a weekly chart. I like to go to those markets. I like to see how it's performed. So let's go to CAD Swiss. CAD Swiss was the first one that I like the look of this week, and we'll have a little look at, did it go short, right? And that's all I'm looking for. And yeah, it did, right? We've had a big move to the downside. Yeah, it said CAD Swiss short last week, to be honest, which was 127 pips. But I mean, look at that. If you had shorted, and I don't recommend doing this at all, because it's just a terrible idea to do. But if you had shorted on the open on Sunday, you know, the market moved 135 pips in your favor to the downside, currently trading about 100 pips. So that's quite a significant move from high to low, 140 pips, right? So what I do then is I'll have a little look at, okay, well, what strategies could you have implemented to trade this, right? Let me just bring in the session breaks. Let's go to an hourly chart. Now, I got short CAD Swiss because of one reason. Again, I'm pretty sure I featured this in some of the analysis this week. But what we had was this triangle pattern, which I talk about over and over again, because what it shows me is that, yes, there's a base of support, right? But look at the buying that's come away from it. We haven't been able to take the previous high. So it just shows you that there's a lack of buying intent here. So I basically sold here with my stop loss above the swing high. And I ended up targeting a 2R out of this one. And this was one of those ones where I woke up and it was, you know, hit that TP, which was nice. Could I have left this on to do more? Again, yeah, I've left some on the table, right? It's gone to a maximum of 3.4R. So I'll make a note of that in my notes and I'll say, well, it actually went 3R. You know, I took 2R out of it, which is fantastic. Could have let it go. Could have let it go further, essentially. But that was one of the trades this week. I also then like to look at what kind of strategies could I have implemented in terms of, was there a really simple strategy where you've got a close below the 50 moving average and the stochastic oscillator in an overbought condition, which is yes. So you had that one here. So on that strategy, I could have gone short on the break and close below the 50 moving average with my stop loss above the swing highs. And in that case, price went 4.4R. Okay. So that's what I like to do. I like to see, is there an opportunity for me to classify these trades? What would work the best? And how am I going to try and profit from the market, right? Using these situations. So that was CAD Swiss. That performed very well. Very, very well. CAD Yen was another one going into this trading week. So this trading week started here. Okay. I didn't take any trades on this. I did not trade this market, okay, because I didn't like the idea of buying Japanese yen, even though it was a strong currency. So again, sometimes I should ignore my own mind and just follow the currency strength meter. Because look what price did. You had a consolidation. You had a breakout of that consolidation. Could have gone short here. Didn't really get any moving average retests on this one. So really speaking, that wouldn't have been the greatest idea to try that strategy. Maybe if you went to a 30-minute time frame, there's potentially one coming in here on Monday, which you could have had a little look at, but I don't think that actually breaks above the 50 MA, comes in just shy of it before seeing a move down. But yeah, interesting still though. You know, you've got this nice little move that formed in the market, and from the open on Sunday, we moved 479 pips to the downside, which is nice, right? Really nice. So again, if you were just shorted on Sunday, you'd have done pretty well out of that market, but that's not something that I recommend doing. Now, the other two that I liked this week, I hope this makes sense, by the way, guys. I hope you enjoy me kind of talking about this, because I know a lot of streams you want to go to, you want to see some trading ideas, you want to see some trading X, Y, and Z, but I'm trying to make you think outside the box with how you trade, right? I always say I'm in this for a long time, not necessarily. The saying is, I'm in it for a good time, not a long time. But I try and reverse that. I want to be in it for a long time, not necessarily. Obviously, I want a good time as well, but kind of butcher the saying just to fit it into trading. But you get what I mean. I want to be in this for a very long time. I don't want to just have a short-term win and then, you know, be classed as lucky. I want to be known as I know what I'm doing, essentially. That's my goal with this. Right. Let's go to Kiwi Swiss then. So, boy, this is a weekly chart. I tried to catch shorts on Kiwi Swiss this week, and I didn't manage to catch any. And we'll go and have a little look at a review why. So, this week, Kiwi Swiss fell 160 odd pips. Actually, that might be a little bit short. 182 pips from high to low. How could we have traded this, right? If I go to a 4-hour time frame, wasn't many pullbacks. Okay, was not many pullbacks. So we're looking from here, wasn't any. So to trade this market this week, you would have had to go to a lower time frame. The only thing that really would have worked this week would have been a sort of breakout of a zone, right? That's the only thing that really would have worked this week. No real retest of the 50 MA. If I go to a 30-minute time frame, there's one here, which you could have traded on a 30-minute time frame, but you would have had to have gone to that lower time frame to take that position. But again, very nice move to the downside there on Kiwi Swiss, which again, the currency strength meter pointed out beforehand. Finally then, Kiwi Yen, and we'll go talk about dollar yen and dollar Swiss as well. But essentially, and pound Swiss we'll have a look at, because I traded pound Swiss short. A couple of opportunities, or one on the 50 MA bounce, potentially another setting up here, but you're at support, and price fell how much this week? 494 pips. So these are the markets you want to trade, right? You want to trade, and this is why I bang on so much about trading a strong currency against a weak currency, because when you do that, you open yourselves up to opportunities like this where it's not that stressful, right? You know, if you're trying to day trade these markets, actually, do you know what? You might find that your performance enhances way more if you trade in a 5-minute in direction with the overall sort of currency strength and weakness. I just try and swing trade these, and you know, I find that the performance of them does pretty well. Again, you have to look at your context, you have a look at your technicals, have a look at your key areas of support and resistance, right? But just try and keep it super simple. And that's what the currency strength meter allows me to do. Right, I got in Aussie yen, but came out when it was close to my TP. Then it dropped another 100 pips. What reasons would you keep a trade? So honestly, right, I've been pretty poor at doing that recently. There's been multiple occasions this week where I could have got more out of the market, and I haven't. The one thing I haven't done this week, which I typically do, is set up 2 trades. And usually when I get a feeling that I want to come out of the market, I take the first position off, move stop losses to break even, and let the other one run. And I didn't do that this week. Don't know why. Just kind of was just in them. You know, another way you could do it is close half the position out, move stops to break even, let it run, because then in your head you've taken some money out, and you've got a stop loss that's covering your position, so you can't lose essentially at that point. So that's for the mentality side of things. I think just yeah, you know, if you're in it, there's good reason to be in it, right? I hope that there's a good reason to be in it because you're in that move. A little bit of stop management might help. Let's say you're trading it on a swing trading point of view. You could be looking at your daily chart and you could just be dragging your stop loss down each daily high. And you say to yourself, well, if the daily high gets broken, I'm going to be out of the move. Now, that could be good, could be bad, depending on the volatility in the market and things like that. Obviously, there is quite a significant amount of volatility around at the minute. So we're seeing larger moves right now. But like if you're long over here, you don't really want to be stop managing unless you get that kind of run up. And then you can just be like, okay, I've got the run now. I'm going to start moving my stop loss above those daily highs. You could also do it above the last 3 candle highs, right? So you could trial your stops like that. So let's say you got short and your high. Let's say you got short on this candle here, and the market was moving to the downside in your favor. You could look at the highest high of the last 3 candles, right? So 1, 2, 3. Your stop loss could be here. Okay, that gives you an idea of just letting the market breathe as you can do that. Yeah, I learned that 2 positions from you and did that with pound Swiss. So thanks for that. Yeah, you're welcome. It's something I didn't do this week. I don't know why. Was just getting in the trades this week. But yeah, pound Swiss was a brilliant one. Pound Swiss was a brilliant one. Looking back in hindsight on this now, I wanted to see price come down to at least this head and shoulders break, which it did. So I left a decent bit on the table here. I must have left at least 70 pips on the table there, which is a little bit annoying because, if I have a losing trade next, then that extra 70 pips could have covered that losing trade, So yeah, unfortunately, I had a very good performance this week. Was better than, I can't remember if it was last week or the week prior, where I just had a break-even week. Even though I called the markets in the exact right way and things like that, I just didn't have a successful trading week. This week has been much, much better. So next week, I'm definitely going to bring back my 2 trades. Going to try and scale in a little bit on any kind of positions that I see. Right, guys, we've been going for about 50 minutes. So my plan today was only actually to do 45 minutes because we did an hour and a half stream on Tuesday. But, I love to talk. So I've gone over that point. So, yeah, you're welcome, right, guy. Try it. Yeah, you're welcome. Right then, guys. I'm going to leave it there. Thank you to everybody that's joined me on the streams this week. I really appreciate it. If you learned something new today, hit that thumbs up button. If you like the way that we break down the markets here, hit the thumbs up. If you like the currency strength meter, hit the thumbs up. I'd really appreciate that. It just lets me know that you enjoy seeing this style of content rather than just seeing, the typical trading streams, that you see across the internet. I want you to get you guys thinking outside the box. Think about your longevity in this, and just think about the deeper analysis that you can do just to improve and enhance your performance. Okay, so yeah, I'm gonna leave it there, guys. Appreciate every single one of you for coming in and chatting, dropping questions. I hope you had a good day and good week of trading, and I will catch you all on Tuesday next week. Yeah, I'll speak to you then. Right, cheers, guys. Thank you very much. Have a great weekend, and I'll speak to you soon.